Hi guys, welcome to another episode of the FXP weekly analysis. So for this week, what we're looking at is we'll be focusing on only one particular pair. Alright, but let me walk you through what are some of the events or news released that you have to take note for this week itself. Alright, so the first one is Monday is pretty quiet. So what you want to focus on is really on a Tuesday itself. We have Australian NAB business confidence together with China trade balance coming up. Alright, in the evening, what we had is power manufacturing production followed by Canadian building permits. Not particularly the focus for this week itself, alright, but if you zoom in into Thursday itself, what we had is RBNZ rate statement, alright. So whether the New Zealand bank will decide to cut its official cash rate. If you look into the futures, there's 50% price in that it's the speculators has priced in 50% that the RBNZ will cut rate, alright. But what we've seen over the week in terms of price action is that the Kiwi itself has strengthened. So this is something that you might want to be cautious as well. Right, on the same day itself, what we have is the Australian employment change as well as unemployment rate. Alright, so the Aussie itself, in terms of the fundamental economic data, has shown improvement over the past few weeks. Right, so what we are expecting over here is slightly dip in terms of the employment change as well as unemployment rate. Alright, but let's see how the data prints. Alright, if it's positive, we might further see the Aussie strengthen. But if a drop over here in terms of data, we might see the Aussie losing some grounds, right, from the past few weeks itself. And of course, on the same day, which is also Thursday, we have the SMB monetary policy assessment. Right, so this is where the Swiss franc might decide, whether they want to cut rate or remain unchanged, which is already in the negative territory. Right. The idea over here is that they might want to cut rates simply to meet up with the price of the euro itself. Alright, so this is something that you might want to take note as well. And of course, once again, on the same day itself, what we have is the pound, alright, the UK segment as well, coming in with their monetary policy summary and their official bank rate. Alright, so nothing special about this, because we do expect that UK will remain its official bank rate, alright, remain unchanged until there's further improvement in the UK economic data. And what they're waiting for is for the Fed to decide on their rate hike first. Alright, so this is an event, but much expectation is that it will remain the same. Right, and then nothing much on the US side except for Friday this week. So what we'll be looking for is their core retail sales data, the PPI, as well as the retail sales. Right, nothing much or nothing pretty significant over here. Alright, but what we expect is, of course, a positive one. Alright, building into next week Fed rate hike decision. Alright, so having said that, I'd like to bring you to one particular pair this video. Alright, why not more is because I want to bring you through the process of this particular pair, how we analyze and how you can actually go through, alright, the technical analysis aspect of trading. Alright, so this is US dollar against the Singapore dollar. Right, what we see over here, alright, if I zoom out, into the daily time frame, what you are looking at is an overall uptrend. Alright, price has hit a few times in the top and it has started to come down. Alright, so what we are looking at over here is some form of consolidation. Alright, though the range of this consolidation is pretty wide. Alright, the top is about 1.43, the bottom is about 1.376. Right, we are in the mid-range of this consolidation, and if you know about consolidation, that's where the harmonic patterns are usually found. Right, so if you pull in your Fibonacci, right, from the bottom to the top, what you see is price did a retracement to the 38.2, bounced up, and now it's starting to come down again. So what we are looking at is a potential bad pattern as well, right? a B point create to retracement is a potential bad pattern. And we know that the bad pattern completes around the 88.6, right, which is around this level. So if this is the completion level, what we normally do is we drop in the horizontal line to zoom out and see if we have any structural level over here. Right, if you look at this chart on the daily time frame, there isn't much in terms of this structural level. Right, so that's not a very good sign for this pattern. Right, and what we like to do is to build in more Fibonacci ratios. Alright, if we pull in from here to here, we do not see any confluence. Alright, this is once again not a good sign for this pattern. But if you pull in, if you pull in from this segment to this segment, we do see some confluence of the 1618. Alright, so not a lot of things happening in this area, alright, but we simply have a bad pattern. Right, and of course, if you build this case together with fundamental, having the US economy, Fed is going to raise its interest rate. The previous few weeks, the data has been positive. This is something where you can align with fundamental as well. Right, but what I want to bring you through is, let's say we have this bad pattern, then can we then use the opportunity, alright, before, or can we find any opportunity to enter the market before this bad pattern has complete? Alright, or even how can we write the market down, alright, to this bad pattern? So we need a case, because we can't simply, just short the market here and expect that this bad pattern will eventually complete. So what I'm bringing you through is exactly in this video, right? What we see over here is price has formed this swing, right? It has formed a lower low and a lower high. So technically, if you zoom in this area, alright, this price action over here is in the downtrend. Once we have established that, what we want to do is we want to pull in Fibonacci 2, alright, from our previous swing high to the recent swing low. And what we want is we want to find some confluence in Fibonacci and the previous structure level. Alright, and we can see that the previous structure level over here and over here, the minor one, confluence with the 50% to 61.8 retracement level. Right, so that's exactly where our focus will be. Right, and should price comes back up to this level, that's where we're looking for a shorting opportunity. Alright, riding down towards the previous structure low, or for those who are more aggressive, you can even ride down towards the bad pattern completion. Alright, the risk to reward ratio, alright, let me bring it in. Alright, should be short at the 50%. What I'm looking at is just slightly at the 786, or even if it's more aggressive, alright, you can just put slightly above the 618. Alright, so let's just assume we put at the 786 level. Right, our TP1 is over here, the previous structure low. It brings us to 1.71 risk to reward. Very decent trade, alright. And if you're looking for extended target towards the bad pattern, you can even aim for a 3.5 risk to reward ratio. Right, so this is something that I would like to walk you through in this video. Alright, if you have a bigger setup, can you also leverage on a potential smaller setup to ride on with the big setup? Alright, so this is the focus of this video. And if you have any questions, or if anything that's unclear, feel free to drop your questions or comments below in this video, and I'll be replying you when I'm free. Alright, definitely gonna reply you. And if you like and feel that you have benefited from this video, do like and subscribe to our channel, because then whenever we release a new video, you'll be automatically updated. Alright, with that, I'll see you in the next video.